Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from EMX Royalty Corp, traded on the TSXV under the ticker EMX and on the NYSE under the same ticker EMX. And we're joined today with the president and CEO of EMX Royalty Corp, David Cole. And Dave, it's great to get you on the show again for an update on EMX. And I always like to start with just a general statement on the value proposition the company offers, because I think royalty companies in general present an interesting business model. And in particular, in the spectrum of royalty companies, EMX has an interesting hybrid nature in that you have the prospect generation side of the business where you're able to develop and explore and find early stage properties that are of value to larger companies, and then give them that optionality to explore and develop the company with their money while you retain the royalty and stage gate payments. But then you also have the other side of the business, which is the ability to buy royalties or create royalties when the opportunity presents itself. So why don't you walk us through from a high level the EMX value proposition, where you sit in the spectrum of royalty companies, and what you'd like investors to know about the company?
Yeah, happy to do that, Chad. Always a pleasure to be on with you. You do a good job of describing the business model. But first and foremost, I'd just like to remind ourselves and your listeners that royalties are phenomenal financial instruments with immense embedded optionality. And you pointed out that word optionality, which we believe is a very good word to describe the exposures that you have when you have a royalty. So when you own a royalty, that's a cut off the gross income coming to the mine in most cases. And if the mine increases production, or if the price of the commodity goes up, or if the engineers figure out how to mine deposits that weren't mineable previously, or if the metallurgists figure out how to extract more metal from the rock than they had known how to do previously, or enhance recoveries. And then the big one would be if the geologists find a whole nother deposit within the royalty footprint. And all of those aspects, commodity price, engineering advancement, metallurgical advancement, and discovery, are multiplicative. And so this multiplicative optionality that exists within a royalty instrument at no cost to the royalty holder is a very powerful thing. And that's why people want to own royalties, is why we are in the royalty business. Fundamentally, I believe that the value of mineral rights on planet Earth are going up over time. And that's been the case throughout my career and lifetime. And the best way to be exposed to mineral rights is through royalty ownership. And so we accumulate royalties in multiple ways. We do the royalty generation thing, as you said, the prospect generation business model focused on the royalty component, where we actually acquire the claims, add value through the acquisition and coalescing of geological data, illustrating prospectiveness, and selling that asset on into the industry in exchange for various commercial terms, cash payments, share payments, work commitments, and always a royalty. We augment that growth of the royalty portfolio through that mechanism with the purchase of individual royalties. We don't have to buy royalties to grow our portfolio because we can do it organically. That gives us the ability to be more patient and pick off royalties that we really want to own, where we know it is an astute allocation of capital. And as you know, also, I'll point out, we do merchant banking and have had some key successes within our investment portfolio, and have netted out $55 million US in gains over the 20-year history of the company. And those monies have been wrapped right back into royalty generation and royalty acquisition, resulting in the portfolio that we have today, which touches nearly 5 million acres of mineral rights worldwide.
Well, Dave, could you just give us a quick snapshot of how many royalties does EMX actually hold now as a company?
Right now, it's over 170. I don't know the exact number, Chad, but we're always selling projects and keeping royalties, and you'll see more project sales emanating from our organic royalty generation process. And we own a lot of assets, 100% around the world, which we're constantly marketing to the industry, selling those off and keeping royalties. That's our gig. We think that's a great way to accumulate a royalty portfolio over time. We'll keep doing it. But the answer to your question is a few more than 170 royalties worldwide. But the bulk of the valuation, if you're a hard-nosed analyst and you're looking at the portfolio, you can see that the bulk of the value is going to be carried by those top 3 or 4 producing assets within the portfolio. And then you get the rest of that optionality of discovery throughout the entire pyramid of assets as a bonus.
Well, Dave, let's also dig into the portfolio you have today. I think another interesting point with EMX is that you're very diversified across the elemental table, as we've joked before. You have a lot of precious metals exposure, but you have a lot of copper exposure, and then you have other metals and other mineral rights. So maybe just walk us through the portfolio of royalties that you hold and the exposure that you have to different metals.
I get often asked about which metal we want to be exposed to and why and whatnot. And I can tell you that fundamentally our value is that we want to be exposed to prospective mineral rights and surrounding our alpha, which is geological talent. So we're utilizing our geological talent to identify prospective regions of the world to be exposed to within the metal space. And as far as whether it's copper or gold or silver, we really are not that concerned with what the commodity is. More so, we're concerned with the prospectiveness for long-term productivity from an asset. And so the diversification has come naturally as we just expose ourselves to more prospective mineral rights in the world. Right now, the largest contributor to our top line revenue is gold, but long term, because of very long-lived copper assets within the portfolio, we have greater copper exposure than we do gold, but a nice mix and significant molybdenum, silver, lead, and zinc as well.
Well, and let's maybe talk about the copper growth side of things. I think a lot of people will be familiar with some of the cornerstone assets in the portfolio, one of them being the Caserones mine in South America and Chile, operated by Lundin Mining. But there's been some interesting developments there just recently, and it's such a big contributor to the revenue stream for the company. Let's talk about Caserones.
Yeah, Caserones last year paid to us 10.4 million. We're delighted to have Lundin Mining Corporation as the operator of that asset. The previous operator was a good operator. That's JX Nippon. We believe Lundin's even better. And the fact that Lundin has further increased their ownership of Caserones, which was announced yesterday, Shad, they now own 70%, shows that they're very, very bullish on the property and that it's performing well. And we're seeing that in our quarterly payments. We're just delighted to be exposed to that. That's a great example of a long-lived copper asset in the portfolio. We believe that astute market observers want to be long copper. We want to be long copper. Copper is a very strategic element, arguably the most strategic element actually in the world today, with all the various things that are going on, electrification, et cetera, et cetera. So we're delighted to be exposed to that. We believe the discovery optionality within the very large royalty footprint, which goes well far beyond the mine itself, is fantastic. And Lundin has always been proven to be a good ore finder and invest a lot of money in exploration, which is massively to our benefit for the reasons we just discussed. And I'll point out that a nice co-credit with the copper that comes from Caserones is molybdenum. Molybdenum is another not often talked about strategic metal, and molybdenum prices have been doing well lately. That's a nice credit for us that comes from that operation. We're looking at mine lives multi-decade.
Yeah, exciting to see generational assets that'll pay for decades. And again, you don't have to do a lot of other work as the company. You just have the royalty in place, picking up not just the copper, but a nice molly kicker as well. And as far as the realm of the copper side of it, just while we're thinking about it, Dave, is there any other assets in the portfolio that you'd like to highlight that have nice exposure to copper?
Well, the most valuable royalty in the portfolio, Shad, is our royalty on the Timok mine, also called Cukaru Peki. That is in Serbia. And there we have a 0.3625% royalty covering production that's been in production now for a couple of years. Last quarter was a record quarter, paying to us 1.26 million USD. We're just delighted to see the continued ramp up. Every quarter has been more than the previous quarter. And they're just mining in the upper small high grade deposit at this point in time, whilst they're doing the development work to advance the lower zone. Zijin Mining Corporation announced that they are putting $3.8 billion into the development of the district and specifically the lower zone, which is the big prize there. That's the big, huge copper porphyry system. When that goes into production from a block cave technology, we're going to see our royalty ramp up significantly. And that was copper and gold. It's got a nice gold credit to go with the copper there.
Yeah, so Timok has the copper and the gold, another cornerstone asset and another big contributor to the revenues for a long time to come. And then since we've talked a lot about copper and we mentioned gold there, you do have some other key gold assets. Maybe walk us through one or two of the other big contributors to the gold side of the equation.
Yeah, I've got two key paying production gold royalties in the portfolio today. One is Gediktepe in Turkey, and it's been paying handsomely. We purchased that as part of a portfolio purchase from SSR Mining Corporation. We're a shareholder in the company, and we're delighted to have that mine in there. But I will say that the upper oxide zone, which is gold dominant with a strong silver credit, does have a short mine life. So we're only expecting substantial royalty income from that for 1 or 2 more years into the future. Then it will transition during a short hiatus into a polymetallic operation from the sulfide zone at depth. That deposit zones from gold, silver near surface to copper, zinc, silver, and gold as it goes deeper down. And so we will be receiving royalties from that as they develop the sulfide zone for many, many years into the future. But the robust payments from that upper oxide zone is only going to last for a couple of years, just to make sure that you're aware of that. But another key portfolio royalty for us is the Leeville Mine in Nevada. And that is a deposit that has just shown that it continues to grow and grow and grow. It's actually multiple deposits within our footprint. And yeah, last year paid about $3.5 million USD, pays every month. And this is a fun one for me because early in my career, I was involved in the discovery of the Leeville deposit when I worked for Newmont Mining Corporation. And it's fun to be in a position today where we get monthly checks from that deposit. That is pretty much a pure gold royalty. That is operated by Nevada Gold Mines, which is a joint venture between Barrick and Newmont, two of the largest gold companies in the world. Barrick's the operator there, and Barrick has proven to be an excellent operator. That royalty, since we've owned it, has paid close to 25 million USD, and we expect for it to pay for many years into the future.
Well, Dave, you raise an interesting point there when you talk about the strength of Nevada Gold Mines with Newmont and Barrick being in it, or Zijin Mining, or having the Lundin Mining group in here. And that's the strength of operators. And I think that's such an important point. We see a lot of, let's say, a lot smaller junior companies trying to become royalty companies. And sometimes the partners they have are more than likely not going to bring the projects to fruition and into production. But over time, royalties can be taken over by stronger companies. And in this case, you've partnered with very strong operators. Maybe speak to the strength of the operators in the stable that EMX has.
Well, you listed some good ones. Zijin in Serbia has done a fantastic job at advancing that deposit. I believe that the Chinese companies can be more aggressive and move things forward and get into production more quickly than many Western companies. We found them to be very good to work with. There was an initial disagreement with them about the royalty document. That has been settled. The royalties paying. We've got good relationships with them. We've been on mine tour and been underground there. We think they're doing a great job. And that's one example. But the exposure to the operator and who the operator is an important part of the equation in the royalty business. There's no doubt about it. And those are top names: Zijin, Barrick, Newmont, Lundin Mining Corporation. Those are all great operators to have. I'm particularly excited about what Lundin can do at the Caserones deposit, given the large footprint of our royalty there and the significant exploration targets that they have highlighted to their shareholders and announced that they have a strong exploration budget with putting in a lot of drill meters into that ground. And we hear that they've announced, in fact, that they're rating the Angelica deposit right next door to Caserones as a very high priority target and likely will become a whole new porphyry deposit there. So that's a great example of what I talked about earlier about discovery optionality. If I move on and talk about another operator that is doing something great on our property, and that would be South 32, working on the Taylor deposit and the Peak discovery, Peake. That is the extension of the Taylor deposit where we have claims that we sold to the predecessor company, Arizona Mining, and now it's owned by South 32. And they've announced a phenomenal discovery there that is copper, zinc, silver. We're just delighted with that. Don't have any idea when it will come into production yet, but we know it's an asset they're highlighting to their shareholders. We know they're continuing to drill that. They've had some very nice drill intercepts within our footprint. And that's just a great example of a large copper plus other metals deposit that's been found within our portfolio, thanks to this whole business model where we're exposed to the upside in these assets without having to pay to develop them. And that's why you want to own royalties.
Yeah, Dave, it's a great example of also the development optionality and exploration discovery optionality where they can just keep finding more pay dirt. That brings up a good point that we've talked a lot about some of the producing assets, but you have a large portfolio of assets that are moving down the pipeline of exploration into development and then marching towards production. Are there any other development assets that you'd like to flag that are moving in a positive way that have had some constructive work going on?
Well, one in particular one that comes to mind right away when you ask that is the Viscaria mine and another copper deposit within the portfolio. This one is copper gold with an iron credit in the famous iron mining district of Kiruna in northern Sweden. And this is operated by a capable junior company. The CEO there is a Swedish gentleman with a broad experience in the mining business, Copperstone Resources. And that's a nice deposit. Past producers coming back into production. They're fully permitted. We believe that will be in production in 2026 and will be a nice contributor to us going forward. It's interesting from a geological perspective. That's the largest underground iron mine in the world, I believe, and has been a major iron producer for Sweden for a century or more. And this is the portion of that geological system, that zone from iron to copper and gold. And it's really fun to study that geology and understand that and to have that exposure to that development. And we believe that the copper and gold zone there has legs, has the ability to grow over time. And Copperstone's already announced an increase in planned production rate, which would all be to our advantage, of course. And that's another great example of discovery optionality within the portfolio.
Well, and Dave, another thing I think that gets overlooked on the EMX story, and sometimes in other royalty companies, is you do have other revenue generating royalties besides just the producing mines. And this comes from some of those different agreements that you strike with companies where they have option payments, stage gate payments, or maybe a milestone they have to hit. Maybe speak to that side of the business and how that also generates good income.
Yeah, I'm happy to do that. I'm glad you asked that question, actually. That goes back to my early history working as a geologist for Newmont Mining Corporation. And there was a hardened prospector and mine engineer and geologist by the name of Lyle Campbell. Lyle has since passed away many years ago, but he was a senior gentleman when I first met him working in Nevada. And he was executing this business model of prospect generation and royalty generation. He taught me a lot. It was great to spend time with him in the field. And it was really emulating his business model. And one of the key aspects that he built into his deals are pre-production payments, even if they're small, and they escalate over time. And those can be composed of lease payments or advanced minimum royalty payments or stage gate payments tied to advancement of resources or other criteria on the property, in addition to a work commitment in ground. So you know that your asset is being advanced by the counterparty and you're getting some nickels and dimes before you get the dollars. I know within our portfolio, we have 40 plus assets that have pre-production payments, and those accumulate up to a nice number. And many of those payments, when they're deals with junior companies, come as shares. And we like to own shares in our counterparties, and we've done well with those shares over time.
Well, let's take a look at the operations, Dave. About a month ago, you put out the Q1 operations report and financials, and just walk us through some of the key takeaways from how things went in the first quarter.
Well, we're just delighted to see continued positive cash flow on a cash accounting basis and strong economic earnings. And this is coming from this portfolio that has nicely matured over the course of the last few years, with increasing production coming from those assets I've just mentioned, and just delighted to be in that situation. With the cash flow that we have coming in, our job and my job specifically is to allocate that capital astutely. And some of the key things that we're working on is incrementally paying down our debt. We have paid down our debt from 52 million to now 35. And that's a good step forward for us. We have the ability to manage that debt quite nicely, given the cash flows that we have today. And that debt was utilized as a nice tool to gain scale to the business. We utilized the bulk of those funds to purchase the Caserones royalty, which is cash flowing very nicely for us. And that was a nice way to add scale to the business. And then the other thing we're doing with some of our free cash flow is a normal course issuer bid, which is a stock buyback. And we believe that the stock is significantly undervalued. And one of the best ways that we can allocate capital is to buy back our own shares. So we're doing that incrementally with National Bank leading that effort for us. And, I've gotten a lot of compliments from shareholders saying, we appreciate you doing that. That makes more sense than paying a dividend, because dividends, of course, are double taxed. If I earn money, I pay tax on it, then I pay it out to my shareholders, they pay tax again. That's not tax efficient. If I buy back stock, it shows support for the company. We believe that's a great allocation of capital because we're trading at a discount to our net asset value. And you cannot buy royalties at a discount to net asset value in most cases. So to be able to increase our exposure on a per share basis by buying back shares, we believe that's a smart thing to do as well.
Yeah, Dave, two great points there. Just worth reiterating that it's a better deal often to have the share buybacks than to get a dividend due to the tax considerations. And then the other thing is that if you're trading at a discount to your net asset value, you typically cannot buy royalties for that. So that maybe the best thing to do is to buy back shares of the company. And so as an investor, I know I sure appreciate it. I should disclose that I am an investor in EMX. But I want to throw in one other thing here on the financial side, Dave, and that is the relationship that you have with FrancoNevada. You just put out some news on June 20th that you've entered into a credit agreement for a $35 million loan with FrancoNevada. This takes out the Sprott loan that was in place, but it also highlights the relationship and the partnership that you have with FrancoNevada on a couple different areas of interest. So maybe just speak to us about that particular loan, but also the relationship with Franco.
That reminds me of another historical aspect of my career. Early on in my career, working with Newmont, I met Pierre Lassonde. I saw the company that he was building, became a follower of Pierre. I spent some quality time with him in Turkey, for example, when he was with Newmont Mining Corporation. And it was really him saying you should pursue your passion that gave me the energy to go out and start this company. And to be in a situation today, 20 years hence, where FrancoNevada is a small shareholder in EMX. They are our lender of choice. They also have syndicated royalty purchases with us in the past. And we have a joint venture with them to seek out early stage royalty financings. We think that they're some of the smartest people in the mining business. We're just delighted to have the opportunity to work with them. I think from their perspective, what they see in us is, one, they appreciate the royalty generation business. That's something that they do not do and is not in competition with them. And two, they believe that we see a different type of deal flow than they might see. And therefore, that creates the possibility for royalty syndication in the future. That's another benefit to them. So it's a synergistic relationship. And they've always been quite friendly and supportive of me, even before they were a shareholder. And now that they're shareholder, I'm delighted. I'll point out that this is a feather in our cap because FrancoNevada, one of the most successful investment vehicles in the mining space in my career, we are the only junior royalty company they've ever purchased stock in and hold stock in. We're just delighted to have that, and I'm delighted to have the opportunity to work with the good guys over there. They're very smart, and it's great to be able to synergize with them. Helps out with our due diligence. They come to us with questions. We go to them with questions. I'm delighted to have them as a preferred capital partner moving forward.
Absolutely. And I guess just as we wrap up here, Dave, we've talked about a lot in this interview. We talked about some of the cornerstone assets in the royalty portfolio. We've talked about some of the development stage and the whole stable of royalties that you have, the revenue generation side, not just from producing royalties, but from the different stages along the way of exploration and development. But in a nutshell, how would you wrap it up for investors that are looking at EMX as far as why should they invest in you instead of other royalty companies? And what does the future look like? How are we looking for the balance of 2024? What other key catalysts would you like investors to keep on their radar?
Yeah, that's a multifaceted question, Shad. The thing that really separates us from the crowd would be the fact that we are technically oriented. Our alpha is strong geologic and engineering talent, and we've always utilized that to be very cautious with respect to how we invest money and how we acquire mineral properties worldwide. And then the fact that we have this integrated aspect of royalty generation as well as royalty acquisition, utilizing those technical aspects to our advantage, puts us in a position where I think our business model is superior to the other competitors that we have. That being said, I don't want to bemoan my competitors. I think many of them are good companies and doing a good job as well. They just approach the world a little bit differently than us. And generally speaking, you want to be exposed to more royalties. And I think that that's a message that the entire group of royalty companies needs to get out so that people understand that's a great way to be exposed to commodities, great way to be exposed to the ever-increasing demand for metals around the world. And, with respect to the catalysts within EMX, I said for years and years that this will become a cash cow. That has fully come to fruition. Shad, we are a cash cow. We're making money. And one of the Achilles heels of the mining industry is a long time lag between prospecting and production. So the people that are buying our shares today have the benefit of coming in below the street net asset value that is calculated for us and gain that whole aspect of a portfolio of assets all the way down to the base of the pyramid, which is crowded at the bottom of the pyramid, and then some really key assets at the top that are producing nice cash flow. And to be able to get exposed to that and have that strong cash flow in addition to the long-term upside of discovery within the portfolio is a nice position to be in.
All right. Well said, Dave. We'll wrap it up there. And I appreciate you spending some time with us here at the KE Report to give us an update on some of the key assets in the portfolio, how the financials are looking, some of the key developments, and continuing to pay down debt, buying back shares, and continuing to grow with discovery optionality and a lot of the different assets in the stable. If people want to follow along with the news at EMX, definitely click on the link below this interview. Takes you directly over to the company website to the news section. And Dave, always looking forward to our next conversation.
Yeah, thank you, Shad. Appreciate it.